XRP sell pressure emerges as Ripple-linked token fails to sustain $2.12 break. Despite briefly reaching $2.17, XRP failed to maintain momentum, suggesting large holders may be unwinding positions rather than accumulating. Heavy institutional activity drives 38% volume spike while XRP lags broader crypto rally, signaling hidden sell pressure beneath the surface. XRP gained 0.5% to $2.0925 during Tuesday trading, but materially underperformed the broader crypto market by 1.77%. Despite the modest advance, trading volume surged 37.94% above weekly norms, indicating significant institutional participation. However, the elevated volume failed to translate into sustainable upward momentum. XRP briefly pierced $2.12 resistance and touched $2.17 before reversing sharply. The move suggests large holders used the liquidity window to unwind positions rather than accumulate. The session's backdrop reflected broader rotation themes. Majors like BTC and SOL attracted capital inflows while XRP's order books showed more aggressive offer-side liquidity deployment, consistent with distribution during rallies. XRP's failure to hold above $2.12 confirmed this level as entrenched resistance. The pattern of a breakout followed immediately by rejection typically signals distribution, especially when accompanied by heavy volume. 189.7 M tokens exchanged hands during the attempt, far exceeding trend norms. The structure now reflects a short-term compression between $2.083 and $2.17, forming a wide equilibrium zone where liquidity is being reshuffled between buyers and sellers. The higher lows from $2.083 provide some stabilization, but the inability to maintain momentum beyond $2.12 keeps the bias neutral to bearish. Momentum oscillators show mild bullish divergence from the $2.083 low. Yet this is offset by declining volume on recoveries and the overhead supply created by the failed breakout. Until XRP demonstrates conviction through $2.17, with volume validation, the technical setup remains range-bound with latent sell pressure. XRP opened the session with mild strength but quickly slipped to $2.083 before stabilizing. A two-stage recovery carried the token toward $2.17, but strong selling emerged immediately at that level. Volume during this push spiked to 184% above the 24-hour SMA, highlighting institutional involvement in the reversal. From there, XRP drifted lower into the $2.09 to $2.10 band, where it consolidated into the close. The $2.09 level acted as psychological and technical support, absorbing flows but failing to produce meaningful upside follow-through. The session ultimately reflected controlled distribution. Strong volume on advances, weak continuation afterward, and consistent seller presence above $2.12. XRP's ability to hold $2.09 will dictate short-term direction. A breakdown through this level exposes $2.05 and $2 as next support zones. Upside recovery requires a clean reclaim of $2.12 and ultimately $2.17, levels where heavy sell pressure emerged. Without strong volume confirmation, any moves into these zones risk further distribution. Institutions appear active but not accumulative. Their participation is more aligned with liquidity harvesting during volatility spikes rather than building directional exposure. If broader crypto strength persists, XRP may lag until overhead supply clears. Watch for narrowing ranges and declining volume, early signals of accumulation shifting back in favor of buyers.